The UAE is one of the most popular destinations in the world to set up a company for online entrepreneurs to save a ton of money in taxes. But what many people don't realize that just because you have set up a UAE free zone company doesn't automatically mean that you're gonna get to pay 0% tax. In fact, if you even make one of the mistakes in this video, it could mean that your UAE company actually has to pay quite a bit of tax, because quite frankly, this space of international taxation and international companies is something that most people just don't quite understand properly. And if you don't do things right, you might think that you don't have to pay any taxes, but in reality, you should be paying taxes. And if you get caught by a government not paying those taxes, then you could get into a lot of trouble. So I want to help you avoid make any of these mistakes as someone who has done a ton of research on this space, probably thousands of hours of research at this point, and as someone who personally runs a UAE company while legally paying 0% tax. Now, this video is not tax advice, not anything like that. You need to speak to a professional if you want to know the specifics for your specific situations, but these are just some of the common mistakes that people usually make that could lead the UAE company actually having to pay taxes. And the first one of these is the fact that the UAE actually does have a corporate tax now. It is no longer a 0% tax jurisdiction for every company. Specifically, from the year 2024, the UAE has now implemented the 9% corporate tax. However, this 9% corporate tax does not actually apply to small businesses, because they have also implemented what's called the small business relief, which means that if the total revenue of your business is below 3 million dirhams, then you are actually exempt from this corporate tax. But you need to be aware of this, because in order to be eligible for this small business relief, you do need to elect for it in your corporate tax return. And yes, this does apply to free zone companies. There's still misinformation out there that says like, oh, it doesn't apply to free zone companies. Yes, it does. And no, you cannot just get away with it by paying all the profits to yourself as a salary. You can pay a salary to yourself, but the salary has to be what's quote unquote market rate, so a reasonable salary. Now, I have a detailed guide on exactly how the 9% corporate tax in the UAE works that you can watch down below in the description. But the first thing to be aware of, if your revenue, so revenue, not profit, for your business is above 3 million dirhams, then you are liable for the UAE 9% corporate tax. And if it is below that, then to pay 0% tax, you have to elect for it in your corporate tax return. And the second thing is not understanding corporate residence. Now, many people still think that all you have to do to pay 0% tax is set up a company in a jurisdiction that doesn't charge any corporate tax, like Cayman Islands, Barbados, or something like that. And then you can just keep living in your high tax Western country and not pay any corporate taxes. That is not how it works. If this were the case, if it was this easy to avoid paying any corporate taxes, don't you think that every company in the world would be registered in a low tax jurisdiction? Why would anyone set up a company in the Netherlands if you can simply set up your company in the Cayman Islands and pay 0% tax while running that company from the Netherlands? So this is why all the high tax countries and pretty much all the countries in the world have adopted rules where basically any company that is operated and run from that country is taxable in that country regardless of where that company is resident. For example, if you set up a company in the UAE, but you as the sole owner, the sole operator of that business keep living in the UK will tax that UAE company just like any other UK company. This is very, very crucial to understand. So basically, the way you can think about it is that companies are taxed where they live, just like people in most cases are taxed where they live, not where they are born. So if you, the owner of the business, aren't willing to leave your high tax country personally and become a resident in the UAE or some low tax country, then incorporating your company in the UAE or some other low tax jurisdiction is pretty much pointless in most cases. And of course, there's exceptions, but in most cases. But even if you do that and you make mistake number 3, then you could still be liable for taxes. And the third mistake is related to dual residence. So let's say you do establish residence in the UAE, because you saw my YouTube video on it, for example, where I say that all you have to do is spend 90 days in the country in most cases to be tax resident in the UAE. And now you think, well, great, I spent 90 days in the UAE, so now I can go back to France to spend the rest of the year there. Again, it is not that easy, because there's no rule in the universe that says that you can only be tax resident or that your company can only be tax resident in one country. Because, for example, if you spend more than 6 months living in France, according to local French rules, France will determine you and therefore most likely also your company a tax resident of France, and they will tax all of your worldwide income. Now the UAE might have a tax treaty with France or whatever country, and then you could like use the tax treaties to not be double taxed and things like this. But basically, not only do you need to make sure that you are resident in the UAE, but also you need to make sure that you're not resident anywhere else. Because if some other country determines that you're tax resident there, it doesn't help you if you also have tax residence somewhere else. But even if you do that, you might still be taxed, because there are certain kinds of income that could actually be taxed by a different country, so not the UAE, and also not your country of residence. And these taxes could be potentially very high that certain kinds of businesses, for example YouTubers, will often unknowingly be liable for. And these are called withholding taxes. So essentially the way this works is that certain kinds of income, for example royalties or certain kind of affiliate commissions, like commission income, let's say that income is being paid to your UAE company resident only in the UAE by a US company. The US will essentially claim that these certain kinds of income are sourced in the US, and therefore the US will say we have a right to tax that income. So yes, you understood that correctly. You, a non-US resident who has never even been to the US, doesn't run a US company, could still be taxed by the United States of America. That is how bonkers some of the taxation nets of some of these high tax countries are. So a common example of this is YouTube AdSense income earned by YouTubers just like myself. Now YouTube AdSense is classed as a royalty that is paid by Google LLC, a US incorporated company, because technically your AdSense income as a YouTuber is simply a royalty paid by Google on the ad revenue that Google earns from the ads that they sell to advertisers on YouTube videos such as this one. And any of these ad revenue that Google earns from US viewers, so specifically people from the US who watch YouTube videos, the US will treat that income as US sourced royalty income. So if you live outside of the US will apply what is called a withholding tax. So essentially that is applied at source. So before that money even reaches your company, the US will take 30% away from that. Now, this is only on the portion of your AdSense income that is earned from US viewers. But if you are, let's say, a YouTuber where the majority of your income is AdSense, you want to look at what proportion of your AdSense is from US viewers, and you can calculate how big of a tax bill this will be. So it won't be totally 30% on all of your AdSense, just on the AdSense on the portion that is earned by US viewers, which for a lot of people is the majority. Now for me personally, this is not a big deal because AdSense is like less than 10% of my total income from this channel and my other YouTube channel, but it is still a tax that I am having to pay to the US, even though I have no connection to the US whatsoever. I think it is absolutely crazy, but it is what it is, and it is something that you need to be aware of. Now, in many cases, the US will actually have a tax treaty with many other countries, such as the UK and a lot of these other Western countries that they're friends with. So if you're living, let's say, in Europe, then you're probably not going to have to pay this withholding tax. But sadly, the US and the UAE do not have a tax treaty, which means as a UAE resident or a UAE resident company, you have to pay the full force of that 30% withholding tax. So this is just one example, and this is not just a US thing. Pretty much any country is going to have withholding taxes. So what you need to consider is, number one, for your business, what proportion of your income is in one of these categories where withholding taxes could be applied? And then number two, which country or countries is that income coming from? And then number three, does the UAE have a tax treaty that potentially reduces that withholding tax with that country? So the topic of the US, even if you avoid all of these things that we just talked about, but you are a US citizen or a US permanent resident or a US green card holder, then you're going to need to consider point number 5, which is simply the fact that US citizens and US permanent residents will always be tax residents of the US no matter where you live. So what this means is that on your personal income, so first of all, the money that you take out of your UAE company will be taxed federally by the US, even if you don't set foot in the US at all. Now, if you stay outside of the US for the entire year, you can apply for what's called the foreign earned income exclusion, which means that I believe now it's the first $130,000 a year is going to be taxed at 0%. So you can get away with that. But then anything above that is going to be taxed at normal US federal income tax rate. So that's the first thing. The second thing is what's called the GILTI tax. So at the corporate level, your UAE registered company managed and controlled outside of the US will still still be taxed by the US at 10.5%. This is the guilty tax that is essentially applied to any US person-controlled companies abroad. So if you are a US person, so a US citizen, US permanent resident, and you own a company outside of the US at more than 50%, then that company will be liable to pay the 10.5% guilty tax to the US. So in that case, it means even if you're below the small business threshold in the UAE, you're not tax resident anywhere else, by virtue of the fact that you are a US person, that company will have to pay corporate taxes to the US. Again, absolutely crazy, but again, something to be aware of if you are a US citizen or a US resident. But as long as you make sure you consider all of these points, then yes, it is absolutely still possible to pay 0% tax with your UAE company, or 9% if you're above that small business threshold, which is still like pretty much one of the lowest rates in the world. If you're looking to move to the UAE, I actually have a team down below that can help you. We've helped more than 100 people move to the UAE and the reviews have been amazing. You can get on a call with one of our partners who's going to help you through the process, answer any of your questions, and then you can move forward if you want to. If you want to understand in detail what the process of moving to the UAE is like, as someone who went through this process myself, I recommend you watch this video right here, and I'll see you in the next.